They simply don't know. And nobody knows right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year because we're still at full employment. And so, you know, all of these concerns and the Armageddon scenarios, and these are putting pressure and compressing PEs, but I haven't seen the downturn of the consumer yet. And so you need to kind of see that. Everybody's forecasting it, that's true, and pricing it into the stocks of consumer products and retailers like Walmart and Target, but they actually haven't seen it yet, trying to find its new equilibrium, because nobody would have forecasted that. There were people just 8 weeks ago talking about loading up on financials and energy. Energy was right, financials was wrong. You basically made no money if you put those on equally.
What do you say to some experts out there who are saying the Fed number one focus is not inflation, it's actually keeping the US dollar and saving the US dollar right now, as we've seen other countries like, you know, Saudi and looking outside of the US dollar system, and that's why we're seeing this dollar strength?
Yeah, maybe. I mean, you know, it kind of, if you try and, you know, figure out the Fed's mandate and how they think before they make their moves, it's the definition of insanity, because at the end of the day, inflation is their number one mandate. But also, they know they have a delicate situation. Try and attempt a soft landing. And what the Fed doesn't know, and what every other investor doesn't know, is how much of this inflation is real and how much is transitory. Remember, we've never had a global pandemic that's a rolling pandemic. Right now, if I were the Fed, I'd be looking at what's happening in China, which refuses to take Western vaccines and is constantly shutting down cities, millions of people locked in their homes. That is very unproductive. That damages supply chains. You heard it from the CEO of Target saying, until we solve for that, we're going to keep having this spiking inflation. And I think that's something that may be out of US control.
Yeah, solid point. One more point on inflation, then we'll move on to talk crypto. I just want to get your thoughts on Bezos' attack on Biden when it comes to inflation. Was he right to do so?
I think everybody has a right to have a voice. I mean, there's a lot of critics, and right now, Biden is, well, his poll numbers are worse than Trump's ever were. So, you know, you've got a really interesting situation here. People are not happy. I mean, the tone of the situation seems to be, and maybe this is Biden trying to placate his party because there's so many different factions. He got hired on a mandate to solve the pandemic, and he sort of got that done. Nobody asked him to turn himself into FDR and give the whole country a new deal. I mean, they're still talking about a Build Back Better spending bill of $2 trillion. That's sheer madness. You couldn't do this now with inflation at 8%. I mean, why even talk about that? You're doing it to placate those party members that have not forgotten that they want to spend another $2 trillion. That would be financial suicide. And I think you've got enough anti-Build Back Better within the Democratic Party that it's never going to happen. Meanwhile, you're just months away from a midterm that is going to just completely change the tone. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which look like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto has had a nightmarish correction. And I think that's very good in the sense that it helps separate the wheat from the chaff, or the cream from the milk, if you wish, whatever analogy you want, because the traditional projects have remained relatively stable. Sure, they've had a correction, but it's not uncommon each year for Bitcoin to give up 50% of its value, and that's certainly been the case here. Ethereum, same thing. And so that's the volatility that will be inherent in crypto until there's policy. They were highly speculative. They were fun. They had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system, because I am now accepting payment for goods and services in USDC, and very often not converting it back to fiat, because I'm simply leaving it in my Circle account and rolling it into these 30-day contracts. In fact, I had a really interesting dialogue with one of my banks last week, and I plan on reading the script at the next crypto conference because it's quite interesting. It really says a lot about the banking system right now. I cannot buy more than a 3% weighting in any mandate of USDC, because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So it's a long way away. That's not what's going to happen first. I think what's going to happen first is we're going to see policy on stable coins. And both the Haggerty bill and the Toomey bill are very clear about what they want in the regulatory environment on stable coins. They want a 30-day audit in both cases, and they want all the underlying assets to have duration of less than 12 months. And that makes sense to me. And I think once they put that law into place, which is an easier bill to pass after the midterms. Nothing's going to happen until after the midterms. Biden is not interested in discussing crypto when his poll ratings are, whatever it is, sub 31%. That's not a place he wants to go. So you're going to have to wait till after the midterms.
And guys like Michael Saylor were so excited when that mandate came out, basically saying it was the biggest green light they had seen for Bitcoin. So we've now taken a step back, is what you're saying.
Well, that was 10%, of a pre-decline for Biden. I mean, the party that you'd think would want to champion this, the same discussion was around decriminalizing or getting cannabis off the Schedule I narcotics list. The chance that happens, zero. These are not issues that when you're declining in the polls, you become a champion of. That doesn't help you.